You know, non-QM are inclusionary loans. They try to find a way to get deals done. One of the main ways they do this is with alternative documentation. 62% of all non-QM loans have alternative documentation. With affordability at an all-time low, and we're going to talk about this today, you have to have an inclusionary loan, a non-QM loan. Talk to my friends at Oaktree. Fill out the information down below because they will help you out with this. Listen, I've heard that Zillow has a position that if a realtor gets a lead, that they must steer that client towards Zillow Home Loans. Now that would make sense. It's illegal in our industry. It's just sound practice in every other industry, but illegal for us. Now, if the realtor conforms, then Zillow is going to protect the market for that real estate agent and continue feeding that agent leads. If they get a cycle of business, then you work that business. Again, sound practices. Redfin realtors must send their deals to Bay Equity. They absolutely have to. Redfin has a much more ironclad, inclusive relationship with their agents than that of Zillow. Those agents must send their deals to Bay Equity, who presumably will be absorbed by Rocket Mortgage. Will Rocket have a Zillow-like relationship with leads, or will they continue the Redfin policy, and how does that include brokers? If a realtor sends a deal to a broker, nothing beholds that broker to send that deal to Rocket, and it could be very difficult for Rocket to track this. Now, if this all stays in Rocket retail, then the deal tracks perfectly. Further, if Rocket keeps that deal with retail, there's no problem with compliance. If Rocket sends that deal to wholesale, then is that not potentially a RESPA violation because they're sending that with expectation of deals coming in return? I don't know. These are simply the questions that I have, and I think they're reasonable questions since the Rocket CEO claims brokers are going to participate in the Redfin acquisition. He's the one who started the conversation. So I say, let's get more clarity on these issues. How does this whole thing look?
So here is the Federal Reserve openly admitting, in their own words, why they pump up house prices and create housing bubbles in order to get people to feel good and spend money.
From the testimony of Ben Bernanke, who started this whole thing, the tools we have involve affecting financial asset prices. And those are tools of monetary policy. There are a number of different channels. Mortgage rates, I mentioned other interest rates, corporate bond rates, but also the prices of various assets. Like, for example, the prices of homes. To the extent that home prices begin to rise, consumers will feel wealthier. They'll feel more disposed to spend. If those prices are rising, people may be more willing to buy homes because they think that they'll, make a better return on that purchase. So house prices is one vehicle.
Oh my God, I cannot believe that. The Fed, under oath, said that they manipulate home prices so that you'll drive the price of homes up because you feel good about that decision. That is manipulation, plain and simple. So how is that working out? Home prices are a mess. Why? Because everybody bought homes with rates in the 2s and nobody can afford them with rates in the 7s. This is more than manipulation. It is cruelty. And if I'm to be so bold, it turns out it's also very bad policy. Yet here we are. Thank the Fed. What do you think?
Blowing up home prices is a matter of policy. This is nuts. It's absolutely insane. I can't believe that. Like Joanna said, here we are. Well, you probably saw that we had lower than expected inflation. It came in at 2.8%. So that means we almost had a refinance market. Missed it by that much. This will, as we've already been seeing over the past couple of days, make rates more than likely to go up. So if you have a deal right now, don't float that sucker. As my pops used to say, lock it, dock it, and put the money in your pocket. I hope this helps.